please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, let's get on with our show. Visaka Industries is the company which is on our radar. The company has reported a good set of earnings. The sales were higher by nearly 12%. The operating profits went up by 14%. Vepa Vallinath, the whole-time director and the chief financial officer, joins us on the phone line. Good morning and thanks so much for joining in. It's been a fairly good start. You managed to clock in a double-digit revenue growth, some improvement in margins. Can you walk us through how you see the rest of the year? Can this momentum sustain?
Yeah, good morning and thank you for having me on the show. Yes, we are very happy actually after a long time. The asbestos cement sheet segment and also the overall building product segment has shown double-digit growth. And I think the growth is going to continue. The ground realities seem to be very good. I think today also Economic Times front page report says that across industries, many industries focused on the rural market are doing very well. In fact, not only the volume has grown, but also the EBITDA margin has grown by 200 basis points when compared to last year's Q1, from 15.39 to 17.39. So with the volume, if the margin is growing, that means the trend for increase in volume is good. In fact, this margin is the highest in about last 24 quarters.
Right.
The PAT has also grown by 32%, which is also the record high, the all-time record high for Visaka.
Okay. All right. Yeah. Mr. Vallinath, you said that 24-quarter high, that's of your buildings products business?
Yeah, yeah, building products, and yeah, I think even the company as a whole, EBITDA margin 17.39%, we have not seen.
Okay, all right. Let's break the building products business up for us, sir. If you could tell us what was the growth in the asbestos sheets as well as in the non-asbestos business. And you're talking about these margins, commendable. I was looking at some of your competitors, EBIT margins of around 17%, we have not seen in any of them. So you're clearly doing something better. Can you sustain these kind of EBIT margins?
I think so, because actually the asbestos cement sheet business is doing well, and the boards business is also, volume is growing. In fact, the domestic boards business, we grew 14% in volume.
Okay.
In the asbestos cement sheet, we grew 10%. I think the scope for growth in volume in asbestos is good, though we all know that the first quarter is the peak quarter. So in terms of...
Oopsie.
We'll just try and reconnect with that. But so far, the management comments, which seem to have come through, seem very, very optimistic. When it comes to demand and the kind of margins that they are enjoying. So that's about Visaka Industries. The stock is flat in today's trade.
Well, it had a good run yesterday, actually, Rima. So that's why I guess that explains why, in fact, the stock is more or less flattish. But the management is saying maybe they can hold on to these margins. In terms of EBIT margins, they're doing nearly around 17%. A couple of their peers, like Everest, they came out with margins which were much lower than that. So, so those margins are quite encouraging. And the management is saying that they can hold on to those margins. But I'll want to quiz them because some of that raw material is imported. And with the rupee at around 69 rupees, does it hurt them? That's something that we would like to quiz the management as well. I don't know whether, do we have him back with us?
No, not yet. By the way, we should keep our eye on Kotak. Just to, deviate away from Visaka Industries, we'll get back chatting with the management. But Kotak Mahindra Bank is on a tear now. It's rallied close to about 2.5%. Let's get the intraday chart up for you on Kotak Mahindra Bank. I guess the street is happy that they managed such a big dilution, such a big promoter stake reduction without any equity dilution. So I guess that is, taken well by the street. So at the high point of the day, so Kotak Mahindra Bank has got some fresh wings. Let's address the markets a little more because the optimism continues. Earlier today, we caught up with Ashwini Agarwal, the co-founder and partner of Ashmore Investment Management India, who says that he's very excited about the Indian markets and sees more opportunities here. Listen in.
This market is sort of giving you a lot of opportunities from a stock picking perspective because there are lots of stocks that are down, earnings are coming through, valuations are reasonable, and of course there are some global risks on the horizon. There is politics in India and you have to deal with all of that. But on the whole, I feel quite excited. I find more opportunities today than I was finding, say 6 months ago or 7 months ago. So I think that, one shouldn't get fazed by the all-time high of the index, and one should focus a lot more on individual stocks and where the opportunities lie. Nifty, we expect an earnings growth which is a little over 20% for the current financial year. Next year is still, of course, a little bit further away, but if you pencil in estimates that sound reasonable, you should still get to about 18 to 20% next year as well. A big driver of the earnings this year is going to be the industrial banks, where we are seeing stabilization of slippages in some of the large industrial banks, and hopefully the provisioning requirement will start to fall off significantly as we head into Q3 and Q4 of this year. Even in healthcare, the earnings are starting to bottom out. You might see another quarter or two of pain for one or two companies which have large molecules that go off exclusivity. But I think on the whole for the sector, you should start to see significant earnings growth.
Now, SIS is the stock in focus after the company will acquire around 51% stake in SLV Security Services. Mr. Rituraj Sinha, the Group MD of the company, joins us on the phone line. Hi, Mr. Sinha. Thanks so much for joining in. Give us a few details about this. What's the amount you're paying for it, for this acquisition, this 51% stake? Is there a clause where you go ahead and later on you pick up the remaining 49% stake? And give us a sense of the margins as well. Rituraj?
Hi.
Yeah.
Thank you for the opportunity. I hope you can hear me.
Absolutely. We can hear you. Yeah, we just wanted to understand a few details about this, you know.
Right. I got that.
Super.
We are very pleased to announce the first acquisition by SIS since our IPO.
Okay.
SLV is a market leader in the NCR market. The company has been in operations over the last 30 years, and currently the revenue base of the company is 240 crores, predominantly coming from the NCR market. Now, as we had said earlier, SIS has raised a 1,000 crore acquisition war chest, and our effort is to, obviously acquire entities across the security, facility management, and cash logistics domains, with an objective of becoming the #1 market position across all these three lucrative service segments. So this is the first, and we believe that we have SLV is a great asset to begin with.
Okay. Good afternoon, Mr. Sinha, and thanks so much for joining in once again, just to try and get some more details, some more color on this acquisition. How much have you paid for this 51% stake? And you indicated that the revenue base is 240 crores. What about the margins of SLV? How would it compare with that of SIS?
Well, the structure is built out in a way that the existing promoter would continue to operate the business against a performance ratchet, which allows him obviously to deliver the growth that we are expecting from SLV with the suitable assistance of SIS and all the processes and technology platforms that we have built. As regards to the payment, we have this is a multi-tranche acquisition. The first tranche for 51%, we have made a advance for 50 odd crores, and the subsequent tranches will be based to performance as per our ratchet structure. So the final pricing will only emerge over the next 24 months, depending on the performance of this asset. But we believe that, from our IRR model perspective, we believe that this transaction would be over our internal threshold of 22% IRR overall.
Okay, all right, and let's try again. Margins on this particular business that you're acquiring, what are the margins, and is there a clause where you go ahead and buy the remaining 49%?
Absolutely, there is a clear path to 100% over the next 2 years.
2 years, okay.
And that is linked to performance, of the asset in the coming 2 financial years.
What could be those parameters? I mean, do you look?
Our ratchet structure is clearly linked to EBITDA CAGR that the business delivers, okay, and a threshold margin level that the business delivers. So obviously, it is wired in a way that the company would have to deliver at least 15 to 20% EBITDA CAGR going forward to make a good return on the ratchet that we have offered. Now, having said that, answering your question on the margin,
yes,
we believe that the blended margin post-acquisition synergy and savings would be more or less in the same range as the security operations of SIS in India.
Okay.
So it is more or less in the same broad range.
All right.
But this is post the synergy and savings effect. Broad range.
All right.
But this is post the synergy and savings effect.
Okay. All right. So what is the maximum amount that you might have to pay out to SLV? We understand that this is a multi-tranche acquisition payout model, but what is the upside or the maximum amount? If everything goes right, they deliver 100% on all your parameters, how much will SIS have to pay for it?
Well, I mean, it would be hard for me to speculate, what the business may perform 2 years hence and therefore how the ratchet will play out. What I would like you to register is that even in a best case scenario for the asset where they completely outperform on EBITDA CAGR basis, the structure is such that SIS should continue to make a 22% return on investment. And that's how we modeled it.
Final question from our end then before we let you go, Mr. Sinha. I remember in a couple of con calls back, you had mentioned that you're around 300 crores behind the market leader. I believe that was G4S. Now you're getting 240 crores odd, right? So are you set to become the largest?
Well, I could clearly say that we are well on path. As we reported in the FY18 full year results, we had an organic growth of 530 crores in absolute rupee terms.
Okay.
This is another 240 crores, which should hopefully get added to the H2 numbers. I think we are clearly on track to become the market leader in this space, and we hope that the situation will evolve.
By the end of FY19, you should be the market leader?
Well, we'll make the necessary announcements as and when we get there, but we are on track for the moment.
Okay, Mr. Sinha, we'll leave it at that. Thank you very much for joining in. So that is SIS consolidating its position in the securities market in the Gurgaon NCR region. Stock is up 1%.
Okay, all right. I think we've reconnected with Mr. Vallinath, the whole-time director and chief financial officer of Visaka Industries. Thanks so much, sir, for joining back. I hope you can hear us this time around.
Yeah,
absolutely. All right. Just to revise those numbers, you were telling us about a building products business. So in the asbestos sheets, you had seen a 10% volume growth.
That's right.
And in the non-asbestos sheet, it's at around a 14% growth.
The domestic sales is 14% growth.
Okay.
Exports are still playing spoil sport.
Okay.
So overall growth is 9% in the non-asbestos sales.
Okay.
But the domestic market, which we have been targeting right from the beginning, has been growing, and it has grown 14% even this first quarter.
How much is the export market for you as a percentage of sales?
Export market is not really very high. Right now, it's about 20%.
20%?
So yeah.
20% of the revenues that you get from building products?
No, 20% of the non-asbestos.
Non-asbestos. And what is the non-asbestos share? I remember, maybe
18%. 18%.
18% of the total building products mix.
No, total sales. Total sales it is 18%.
Okay.
So on the building products means it will be 18 out of 65. Okay. 18 out of that will be about 25%.
Right. Do you expect any pressure on your raw material costs since you do import, and we've seen the rupee depreciate a bit? So going ahead, is there any pressure on your operating costs, and can that impact your margins?
Actually, the rupee depreciation has already taken place, and even the first quarter, part of the quarter, the rupee was already depreciating, and some amount of price increase we have taken to offset those costs and some other salary increases, etc. costs. That's the reason why the margins actually have gone up despite the volume growth.
Yeah.
So after bearing all those costs, these things have gone up. And the dollar prices of raw material is anyhow fixed for the full year.
Okay.
And therefore, there is no going to be increase. If at all any further increase, depreciation of the rupee is there a little bit. I don't think it is going to be significantly higher anymore. But even that, I think in a booming market where the volumes are growing, I think we will be able to pass it on, because we are also seeing that in the subsequent quarters also we will see double-digit growth in the building product segment.
Okay, all right. So you were telling us the last time about that expansion you were taking on in Haryana, I think. As per the exchange notice, you're saying that that's a bit delayed to September 2018, correct?
Yes. Yes.
Okay, all right. If you could give us a sense about what kind of a debt number do you have in your books currently, because you're undertaking this expansion, and I was looking at a couple of other releases. There are a couple of smaller expansions as well that you're taking under. And in your annual report, I think you were talking about reducing the debt. So a few points here. What is the debt in the books? What will it come down to? And what are you borrowing at? I believe it's at around 6.5%?
Yeah, it's about 7% now.
7% is what you're borrowing at. And what is the
Yes.
debt in your books?
Debt is about 200 crores at the end of June 2018. And
Okay.
I think this should come down by at least another 60 crores during this year, because I expected 80 crores. But I think they are doing a small expansion of 12 crores again in Jajjar.
Okay.
The value-added product, the sandwich panel product that they are adding. And for the full year, I also would like to mention that the spinning division, which is the other division, which has really taken the brunt of GST impact last year, is coming out of the woods. And as against the first quarter margin of last year of 5.28 EBITDA, this quarter we did 11.19. And these margins are going to sustain and even grow further. Plus, the volume growth is also going to be a good double digits in the subsequent part of the year.
Okay, all right.
That is going to give support to the overall margins of the company.
I think the street likes what you're saying, sir. As we speak, the stock is moving higher. But give us a final number then. In FY17, you did around 42 crores of net profit. In the last year, you did more than 65 crores approximately. For this year, what kind of a net profit number you're looking at? And what about FY20? You had guided for around 1400 crores. On the cards? Top line.
I think close to 1400 crores we should do by FY20.
And net profit?
And this year itself, we should clock at least 15% plus top line growth.
15%?
So, 15% top line growth overall.
Okay.
Upwards of 15% top line growth.
Net profit?
Definitely. Yeah, net profit should be better than this year. Definitely, I mean, this year, last year, FY18 itself was a record year, the highest PAT ever recorded by the company. And I hope that FY19 will be a further higher record.
By how much? Net, what can you guide your audience? I mean, you're saying it's better. We are aware that it was a record last year. But for this year, what can...
Yeah, already the first quarter, the main quarter, has already delivered 30 plus.
So 30% for the year we can look at?
No, let me tell you, 30 crores is what we have already done in the first quarter. And we are looking at a double-digit growth in all the three products' volumes.
Okay.
We are hoping the margins sustain. So it should be a reasonable figure. I think we'll get closer to the estimates maybe at the end of second quarter. I think we'll chat again.
Sure.
Maybe at that time I'll give you a clearer picture of the exact number.
All right.
Nigel always looks to. Yeah.
Okay. All right. Mr. Vallinath, thanks so much for joining in. So that's Visaka Industries. This stock has moved up post the interview with CNBC TV18. Let's just take a quick check on Titan. That will be declaring numbers today, and the stock is moving up. So a little bit of a spike up has come through in Titan ahead of its numbers. Mangalam joins in to tell us what to expect from Titan this time around. Well, Mangalam, the company had already indicated that the jewelry sales were fairly muted in Q1. So are the expectations on the lower side?
Absolutely, you know, Rima, the expectations are on the lower side. More importantly, even the stock is off its record high by about 11 odd %, which is unlike all the other FMCG companies which are going into the results at a record high. So we're expecting about a 10% growth on the top line. Similar is the kind of growth that we're expecting in the jewelry segment, 8 to 10%. That comes on the back of two reasons. One, the mutedness, that is, muted demand, and secondly, a high base. In the first quarter of FY18, the jewelry business grew by about 54%. So for the company to grow any higher on that high base would be difficult, which is what they told in their cheat sheet that they gave to the exchanges ahead of the numbers as well. The other divisions that the company has are the eyewear and the watch division. Not too much in terms of their overall scheme of things, but an 8 to 15% growth on that is on the cards. We will watch out for management commentary in particular in terms of the number of stores that they're opening, the response to their new launches, as well as what kind of margin trajectory that they can guide for. Because remember, the company's margins have been expanding. We are expecting the margins to expand by about 100 basis points this quarter as well. Especially in the jewelry segment, we expect an expansion of 150 odd basis points.
Okay, all right. Thanks so much for that, Mangalam. We'll wait by for those numbers. Well, I think on that note, all right, Mangalam, but you've got a busy day, I believe.
Right.
What about Maggie?
Maggie, I'll try to wrap it up in less than 2 minutes, actually.
Please do that.
Revenue growth of about 13% is on the cards, and that comes on the back of some strong sales coming in from Maggie. And secondly, also they've launched a lot of new products. In fact, Nestle last quarter itself, they said that they've gotten into the breakfast cereal space and all. So all those new launches likely to take their India revenue up anywhere between 11 to 13%. But for Nestle this time around, it will be important to see what they do on the operational front, because most of their inputs, be it wheat, milk, or chocolate prices, even sugar prices, they are lower. So that would aid gross margin expansion, and an EBITDA margin expansion is on the cards. On the back of that, we're seeing a 40% plus growth on the EPS. The stock is at a record high, so let's see how the street takes these numbers, even if they beat estimates.
Okay, thank you so much for that, Mangala. So that was a 2-minute update on Nestle. By the way, some statements coming in from transformers and rectifiers. They will be seeking a shareholders' nod for a QIP and a preferential allotment to the tune of about 250 crores. The stock has moved up close to about 2.5%.
You know, Rima, we came out with VIP's numbers, and you know, the stock had spiked up. Remember, in terms of the total market of the luggage market in India, it's around 10,000 crores, very, very roughly, and around 40% of that basically is the organized market. Out there in that organized market, VIP has more than 50% stake. But also keep an eye out on Safari. That's a smaller brand. It has only 10% of the market, but that as well is moving higher. It's moving to a record level as well. Slower volumes out there, but that as well moved higher when when VIP moved up. Even Safari did move higher. I think on that note, we'll slip into a short break. You come back, we'll get you some trading strategies on the Nifty. Stay with us.